All right. If you own any AI memory stocks at all, SK Hynix, Micron, if you own any ETFs, quite frankly, if you don't and you're thinking about getting in, this is a video for you because I'm going to share with you the fact that we know that AI memory stocks are soaring, but is a crash coming? I'm going to talk to you about the bull case for why it is not coming. We're going to look at the bear side, and then I'm going to give you the final conclusion. This is some information that you need to pay attention to because I'm going to share with you everything you're going to want to know. In fact, here's a little teaser. Here is the bull case of why. And we're going to talk about everything here, a lot going on. Here's the bear case. We're going to talk about everything here, and then we're going to summarize it. Is a AI memory stock crash coming? All that in this video. And I'm going to share with you. We're going to expand on everything. And I'm going to give you a lot of data and a lot of information you need. So let's jump into this. All right. So look, I own Micron. I'm going to be buying SK Hynix on July 10th or thereabouts when it comes out. I am 100% on AI memory. Now I own NVIDIA and AMD and all that kind of stuff, just like you, but let's talk about everything here. Okay. So look, the bull side, why the boom may continue. There's some key numbers you need to be aware of, and they're right here in the AI infrastructure CapEx forecast right here at the top. 2026, the number's actually been raised from about 500 to 600 billion to 750 billion spent on CapEx expenditures for AI data and AI infrastructure build out. All right. 2030 forecast, 5.5 trillion. That number has gradually started to creep up. And the number that I'm hearing is 7 trillion. Now, there are different numbers out there. I've seen numbers from Morgan Stanley that show it to only be 1 trillion going to be spent by 2030. I think that is dramatically and way, way, way too low. Okay. If you look at these numbers, you're talking about a 9.3x growth from 26 to 2033. That is dramatic. These are hard dollars, real money that is being spent by companies globally. Okay. Not just here in the United States, global. This is a global initiative. And you always have to remember that this is an arms race. This is an arms race for the companies that are building out this AI infrastructure scenario. It is an arms race and they do not want to lose. Okay. They are afraid that they're going to lose. I'll take you back to the Cold War between the United States and Russia. When we were building out nuclear arsenals, neither side wanted to lose. That is almost exactly what we're seeing here. These dollars are not going to stop. And that is a thesis, a theme that we hear a lot from Wall Street. And that kind of goes into this is a crash coming scenario. They talk to you about memory being cyclical. Our CapEx dollar is going to all of a sudden disappear. No, we have 4 or 5 year plus contracts already assigned, lined up with Micron and SK Hynix. These are, one of them was $100 billion. I mean, it's insane. New deal that Micron just put together with General Motors. Okay. This is much different than what Wall Street would believe you or lead you to believe about the dot-com bubble, all that kind of stuff. All right. Look, number one, and I just talked about this on the right here. Demand is booming. AI adoption is accelerating. Okay. Every president, every CEO, every vice president of every major company, all the way down to small companies in the world are looking at AI and how do they leverage it? How do they deploy it? How do they get into it? What is their plan? And what are the dollars that we need to allocate to spend to get to this? Okay. That's what we're looking at. AI adoption accelerating across clouds, enterprises, consumer applications. Global AI market is projected to reach 1.8 trillion by 23. Remember, I'll take you back to the arms race for the hyperscalers because they want to build out and then they want to turn on and sell it to the masses in different shapes, forms, formats, all that kind of stuff. That's why they're spending hundreds of billions right now and ultimately trillions of dollars. Okay. HBM, this is specifically for memory. HBM is mission critical. Okay. Modern AI chips require HBM for massive bandwidth. It is simply a fact of the matter. Okay. It is. Okay. Without it, performance drops dramatically. They can't deploy anything without AI memory, without these memory chips from SK Hynix, Micron, Samsung. Okay. HBM market is projected to grow at 30% plus CAGR through 2030. That's from TrendForce. Here's where it gets interesting. We all know that there is an AI in number 3 right here. Supply is tight. We all know that there is a supply issue. Simply put, SK, Hynix, Micron, Samsung cannot build enough memory fast enough. They simply can't. Everybody knows about it. And therein lies the unique opportunity that exists right now in the AI memory sector, because with lower supply and this unprecedented, amazingly massive demand, what gets to happen? Everybody gets to raise their prices. Micron, SK Hynix, Samsung, and so forth are raising their prices. Higher prices mean what? More profitability. More profitability equals what? More earnings. What does more earnings equal? Better stock prices, raised future guidance, all that kind of stuff. Okay. It's insane in a good way. Number 4, AI spending is structural. I talked about this at the top of the video. Hyperscalers and companies and enterprises are committing to multi-year AI infrastructure build out. They have to. It is an arms race, guys. It is. And you need to remember those words. The AI build out is an arms race. The company that is viewed as the loser will lose. Okay. And there will be winners and there will be losers, which is why they are spending ultimately trillions of dollars on this. Number 5, again, the bull case. Barriers to entry are high. They really are. Okay. These are really the main 3 that own 90% of the market: SK, Micron, Samsung. And right now in the United States, you can only buy Micron. SK Hynix, you'll be able to buy their stock starting around July 10th. And then Samsung, again, is in South Korea. All right. HBM requires 2.5 to 3x more complex process steps than DRAM. So the HBM market, again, barriers to entry is high. Number 6, AI adoption is still early. It really is. Okay. That is something that not a lot of people are talking about, and Wall Street's not even really talking about that. I need to get a drink real quick. They're really not, guys. They're not. And so kind of continuing on, look, the bottom line here from the bull case is massive accelerating demand, limited supply, long-term structured tailwinds. I would add long-term structured contracts. Every single company has come out and divulged major contracts. Again, we know like Micron, all that kind of stuff, SK Hynix, Micron's new deal with General Motors. These are multi-year deals where those contracts are locked into place, and there are tens of billions of dollars each of these contracts. That is going to change the cyclical nature of the memory market. We're going to talk about the memory market cyclical nature in the bear case. Demand, 9x growth. Technology, HBM is the future. Infrastructure, we all know that. Okay, so what do you think as far as the bull case goes? I think that was a really good, real quick synopsis of that to kind of run through that and talk about what we're seeing playing out there. Now, I like to give you guys both sides of this equation, okay? And the other side of the equation is the bear case, all right? So is there a bear case to this, right? Memory stocks, why a crash could be coming. I actually don't believe some of these, right? Valuations, 6 major risks. One thing that's out there that's been talked about is valuations are extremely stretched. Yes, they are. Valuations for all these companies have gone up exponentially. SanDisk went up, they're at 4,500% in the last year. Okay. They're insane. But therein lies the point. This is a AI memory stock valuation scenario that no one has ever seen ever. Okay. So yes, AI memory stocks are up 200 to 600% in the last 2 years, right here on number 1. Look, priced for years of perfect execution. Any disappointment can cause sharp multiple compression. Absolutely. We saw about 3 weeks ago, SK Hynix mentioned kind of in a sub conversation, if you will, about changing possible production a little bit. And the market just went bananas. Am I saying there's risk here? There's always risk in any stock market scenario. Okay. But look at Micron, June 24th, just blew away the numbers and just across the board, right? All that is there. Does execution have to happen? Yep. And here's the thing I would tell you. If you don't want to own, Micron and SK Hynix and Samsung by themselves, again, get yourself an ETF, okay, where you spread your risk. You dilute your valuation a little bit because of that risk. You're not just invested in SK or Micron, but again, you do spread your risk a little bit. Okay. Valuations are stretched. I agree, but I don't think it's a bear case for a crash could be coming. I think if we see misses on any front from any of these companies, we're going to see some pullbacks, right? We might see a 15 to 30% pullback in that respective company. And yes, they will draw the other ones down a little bit at that time. But again, I don't envision a crash. Number 2 is wrong. I think that memory has been a cyclical industry. It is changing. It is evolving. Remember those all these structural contracts, these massive contracts that these companies are signing. Remember that, right? Well, that therein lies a secret that Wall Street really is not telling you about, so to speak, of why cyclical nature is no longer applicable in the memory sector, because those long-term contracts, they are structured. The companies like Micron and SK Hynix, they know each component deal over a period of time. Okay, so they can recognize that revenue as they go forward. They build those fabrication facilities to come online in 27 and 28 and ship accordingly and manage revenue recognition associated, thus eliminating the cyclical nature of memory. And remember, we're in an AI super cycle. Okay, we really are. And this super cycle is like nothing we have ever seen before. I do not believe number two is a factor in a possible crash scenario. Okay. And again, go back to the hyperscalers, enterprises, big companies. It is an arms race. They're going to continue to spend money on everything AI, all the chips, AMD, NVIDIA, Intel, the memory, so forth. Okay. Number three, customer spending could slow. I don't believe that. Remember, go back to the long-term contracts that are already in place and more coming, right? CapEx expenditures are real. All right. It's simply, I don't really believe that's going to happen. Now, some of them could possibly fall by the wayside. And if you see one start to pull back on their CapEx expenditures, what's going to happen? Wall Street is going to freak out, and it is going to drive the AI memory and AI semiconductor sector lower a little bit. We were talking about a reevaluation of price at that point in time. And is that possibly going to happen? It could, because again, it's an arms race. It's all about the money and who has enough money to get there. Okay. But that problem is on the hyperscaler side. I'm actually scaling back on the stock that I own in some of the hyperscalers. I am. Okay. Number four, competition is rapidly emerging. No, what's happening is SK Hynix, Micron, and Samsung are simply stealing market share a little bit from each other. And SK Hynix is the leader in the clubhouse for the HBM market. Okay. So there's no new competitors coming in. Between those three, they own 89 to 90% of the entire AI memory sector. No new competition. And because there's a massive barrier to entry at the actual how hard it is and how much money it costs to build these fabrication facilities, there is really no new competition coming in that is going to dramatically steal from the big three. Okay. Technology and execution risk, number five. HBM is complex. Yes, it is. These companies know how to do it. Yield issues can impact supply. Sure, there could be some type of supply chain issues or yield issues. Packaging and advanced nodes carry execution risk. Again, and missteps are here, but we're going to get guidance, future-looking guidance. Market sentiment is extremely bullish. This is actually one that I kind of agree with. Everybody thinks that the AI memory run is going to go forever. It is not. Okay, it is not. Remember, go back up in the upper right-hand corner. The kind of the forecast for the build out, it kind of takes us into 2033, 9 years from now. Okay. So no, don't do math in public. 7 years from now. Been a long day. My apologies. Look, we've got a 7-year run, 26 to 33. All right. Just remember that. And it is a runway. It really is. Okay. Risks are real and they are there. I disagree with a lot of these, and you may disagree with me, and that's okay. So final case here, I'm going to get into kind of the final scenarios and final conclusion. Thanks for giving me a few minutes. If you haven't already done so, please hit that subscribe button and let's wrap this up and talk about, look, is there really a crash coming? Okay. So on the left-hand side column, what could cause a crash? These are some things we're going to look at them real quickly. AI CapEx, if it slows. If we get word that 2 or 3 of the AI the hyperscalers and big enterprises all of a sudden are starting to slow down, that is going to impact the price of our Micron, SK Hynix. It's going to impact everything. Okay. And that could happen. I don't see that happening today. I see that could be happening maybe in the end of 27 and 28, but I'll take you back. Long-term contracts are already locked into place. Monies have already been allocated. Monies have already been spent. Build out is happening. All right. HBM supply exceeds demand. That is not going to happen. It is not going to happen between now and probably 2030. Why? Because the companies are going to manage how they build those fabrication facilities and how they ship those units. They are going to be managing to expectations, period. Okay. And ultimately, they will build, the fabrications will build out enough of a demand, enough to produce, and we will no longer have a shortage. But that, again, is not tomorrow. It is not next year. We're talking about north of 4+ years down the road. Pricing weakens. Pricing is not going to weaken. It is not going to weaken because these are three companies that control the pricing for 90% of the AI memory sector. They are not going to weaken prices. Why? Their profits, their stock price, all those kind of things. Gross margins are not going to compress. Now, it could compress if their cost basis goes up, right? If we see a dramatic uptick in the supply chain cost basis going into the memory production, but I don't see that happening. There could be some rare earth minerals or something like that playing out in there. But again, I'm not seeing that happen. Number 5, earning estimates revised lower. Yeah, you bet. That one could cause a possible correction if one of these big companies does that. But they shouldn't, because of everything we've talked about, right? There should not be any missed expectations or lowering of guidance because of everything we've talked about with this multi-year run that is coming at us. Okay. Multiples contract. Okay. Investors pay lower valuation multiples at risk premium increases. I don't see PE multiples contracting. I don't see multiples contracting. Do you? There's really no reason they should, as long as the companies are executing on current quarters that they're reporting on, and they're obviously revising up forward-looking guidance. Okay. But again, I don't, if any of these happen in this left column here, as far as a crash, I think we're looking at pullbacks. We're looking at market corrections, which, by the way, market corrections, guys, will happen along the way. Why? Because Wall Street's going to spook you with some kind of BS about, CapEx dollars are going to freeze up tomorrow, blah, blah, blah. I mean, there's always going to be a narrative out there that's going to be going counter against what we're seeing. Okay, what could prevent a crash? And this middle column here. Look, AI, we know this, and I've talked about this. AI infrastructure spending is going to remain robust. Multi-year contracts are in place. AI CapEx supports long-term demand growth. These are dollars that are being committed with long-term growth, long-term contracts. HBM demand outpaces supply, okay? Capacity remains tight. We know beyond a shadow of a doubt that HBM demand is going to continue to outpace supply. It is for at least 4 years, at least until past 28, because that's when new fabrication facilities come on. But I'm going to remind you that the companies SK, Micron, and Samsung are going to manage that shipping component. They are, okay? They're going to manage how much and when they ship it to manage that supply versus demand scenario. Pricing power will be maintained. It is going to maintain higher prices. Gross margins will continue to be up because of those higher prices. Earnings growth will continue because of those higher prices, driving to higher profits and higher earnings per share. Earnings growth continues. We are going to continue to see high growth, high revenue, high EPS beating expectations, and higher future-looking valuations. These future guidance are getting insane as far as how much profitability and earnings are driving. We have never seen anything like that. And that's what has Wall Street spooked. They've never seen anything like this, guys. They haven't, okay? Valuations will continue to remain justified. Right now, the latest valuation of some of these companies is absolutely astronomical as far as, what they're seeing at the price. Again, I'm going to see sustained growth. Final conclusion is over here on the right. And look, I think that this is really nails it, okay? Short term, next 6 to 12 months, volatility is there. Why? Because I think ultimately Wall Street is grappling with how to deal with. Nobody has ever seen this much of a CapEx expenditure for anything like what we're seeing for the AI build out. It has never been seen. And you constantly see it compared to the dot-com bubble. That was nothing like this. I am 57 years old. See the gray hair? I was there living through the dot-com bubble. It was absolutely insanity. Any company could slap a dot-com on their name and they would get a massive valuation, and it all burst because it was not real, period. Okay. But there is volatility in the memory sector, and most of it is euphoria and ignorance driven, meaning a lot of people own these stocks, but they don't understand the fundamental business. They don't understand what we're talking about. And so they sell immediately. They're like, oh my God. Then they freak out and they sell. Okay. Volatility is real. Expectations are high. It's a razor thin line that these companies are walking as far as managing, managing earnings and managing expectations. But they have both and all three shown that they have a capacity to do it. But I do really believe this. A key point right here on the right, a 15 to 30% pullback will not be unusual to see in the sector. We saw just recently Micron drop 10, 12 plus percent on really nothing. Okay. It is going to happen, and view those pullbacks as opportunities to DCA in, dollar cost average in. But long term, 3 to plus 5 years, the bull case is strong. It is. Long term contracts in place, fabrication facilities coming online to ship to meet demand. CapEx expenditure dollars are real. They're not going to go away. It is an arms race on the hyperscaler side to get this done, and they will and want to get this done. And whoever loses. I'm talking about loses big time. Those companies may go out of business 10, 15 years down the road because of the money they spent, and they are viewed as losers in the AI build out race and war. Okay. Bottom line, a correction is more plausible. It could happen. I agree, it could. But I don't believe there's a collapse coming. Okay? A collapse will come for some cataclysmic reason outside of the sector. So stay focused on what you're trying to achieve for your goals. Stay focused on what your expectations are and how you manage yourself, and you will be fine. If you haven't already done so, subscribe to the channel. Let me know your thoughts. I would love to hear from you. If you like what I'm doing, let me know if you like these new style of these infographics that I've started to use to present to you guys. Would love to hear from you. I love how they've come together and just presenting a sheer amount of content to help you guys manage all this process. And if you guys like these, I'll continue to do these. But I actually think these are really fantastic. Yeah, so let me know. I'll see you down the road. Thanks for giving me a few minutes of your time. Go make some money. We'll see you.